Good morning, everyone. Thank you for joining us on Morning Markets today. We're going to focus in on the events in Georgia today and the implications that had for asset markets yesterday. So just looking across how asset markets performed yesterday, over the course of the day, there was growing confidence in markets that the Democratic Party in the US would win both seats in Georgia, effectively allowing them to take control of the Senate, and that would give the Democratic Party control of both the Senate and the House of Representatives, so allowing them to move more dynamically with the agenda that they had set out and that President-elect Biden has set out. And that agenda was very much around additional fiscal measures and additional fiscal support, infrastructure spending, also regulatory change, maybe potentially taxation change. All of those things taken together have implications for asset markets and areas and sectors of asset markets. So where was I suppose this most evident yesterday? Two areas of asset markets: in the government bond market, not just in the US, but also globally, given the importance and the linkages of the US economy globally and the bond markets, how they interact on a global basis. So we saw yields there move up. As we discussed yesterday, we talked about moving through 1%, and indeed over the course of the day, we saw the US 10-year yield closing at 1.04%, up 9 basis points from its previous day's close. And that's an indication of an expectation of improvement in growth, and that growth coming through from the further fiscal stimulus, and that potentially leading to a little bit of inflation in the system. And as we know, the Federal Reserve are willing to let inflation run a little bit hotter at this point in time. Their average inflation target is 2%. Still a way to go to get there, but inflation expectations are certainly getting to that level at this point in time. The other area in the market where we really did see the impact yesterday was in the more economically sensitive sectors of the market. And by that I mean sectors such as energy, materials, and the financials, and indeed also the small and mid-cap area of equity markets, which have more representation of those companies sensitive to economic trends and change. All of those areas really did perform very strongly yesterday, and indeed if we look at the subcomponents there, the Russell 2000 was up 3.9% on the day. The broader banks index was up over 5% as well. Looking at that then in the context of Europe as well, we did see European markets up between 1.2 and 3.5% on the course of the day. The leader in that again was the FTSE, which has had a strong start to the year, and that's a function really of the sectoral makeup of the UK market. We've discussed this in the past, but if we think about the exposure that the UK has to energy, also to materials and to financials, three sectors that really did benefit yesterday, and we saw very strong performances from a number of the index constituents in the UK market yesterday. Then just bringing that back to the US, I touched about the strength of some of those subsectors. What did it mean at an index level? Well, we saw the S&P up about 0.5%. Contrast that with the Nasdaq, which was down 0.6% on the day. And that's the other side of the positive agenda that the Democratic Party could move forward with. There is some concern around increasing regulation, what that may or may not mean for some of the dominant technology platforms as well. The other key thing just to touch on in the US from yesterday was the release of the minutes from the Federal Reserve's discussion in December. And a couple of things I think are worth speaking to within that. Basically, looking at the economic environment, the discussion was very much that the rate of improvement that we've seen in improvement could slow as we see a resurgence of COVID-19 cases in the US, and that could slow the economic environment. Although, going back to something we touched on yesterday, that wasn't really evident in the manufacturing PMI data that we discussed. Also, they were very careful as to how they spoke about changes to the asset purchase programme. And indeed, there was some indication that should circumstances change, they may look to move further out the duration curve. So purchasing longer dated US treasuries as well was something that was considered. And crucially, they talked about not really making any change to policy until there was substantial further progress in achieving their goals. And those goals are an average inflation rate of over 2% and something closer to near full employment as well. So appears to be, little thought that the Federal Reserve are really going to change their approach at this point in time, albeit they reserve the right, should circumstance change, to take the appropriate action. I think the other thing I just wanted to touch on today is in Europe. We had PMI data yesterday, just our final PMI data, I should say, for December. It just really highlighted the trends that we've been discussing. Manufacturing side of things ticking along okay, but services being impacted by the dynamics that we're all very much aware of today in terms of the lockdowns, etc., and how that impacts the services side of the economy. Just then, turning to Asia overnight, little impact really from the political fallout in terms of what's happened in Washington overnight. We saw equity markets there continue to move higher. The exception there being Hong Kong, where there is some concern about the regulatory backdrop in the US and the implications that may have for some Chinese technology companies, so the likes of the platform businesses, but also this back and forth decision from the New York Stock Exchange around delisting some Chinese companies as well. That's it for today. Please do join us again tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.